morning. Good morning. Happy Monday. Hey, look at that market going down. How's everybody doing? I get to where when I've streamed for a while, or like, let's say I stream for a few days in a row, or 4 or 5 days, and then all of a sudden I have a couple days where I'm not streaming, and then you have the weekend. It feels like forever since I'm streaming. It's good to see y'all. Good morning, Chris, Max, Shadow, Benton, Enrico. Good morning, everybody. All right. I mark my opening range gap here. We had the market close Friday, right up there. And then we just opened up right here at 6:15. So we actually gapped down today. Opening range gap low. Oops. And as always, I'm going to mark out the middle of it there. 629. All right. Looks like we're going to close that up right away. We went right down into that imbalance. Look at that. All right, so I want to go over real quick. There's no news today. Morning, Corey, Mary. There's no news today. However, there's CPI on Wednesday. So that means I will not be trading tomorrow. Not only not live streaming, but I won't be trading. The day before CPI and the day before NFP are 2 days that are like off limits. I want to start on the daily chart here right quick. We have the daily chart, and potentially we were going to have a gap right here, fair value gap. We'll see if the market wants to rebalance it, but we did gap up here. So what I'm looking at, we still are overall bullish because we had this pullback. We took these highs, right? We left this fair value gap, up here, and we're still pushing. We just made a new all-time high overnight. So until we displace down on the daily, I'm going to remain bullish overall. Even, who knows how high this can go. But if I drop down to the 15-minute here, we did have this. We have some opening range gaps, some old ones here that never closed, right? And then Friday, we gapped up. Nice big gap up. Big, huge gap here. Double gap, 15-minute. That means there's probably a 1 hour gap. And sure enough, there's a big 1 hour fair value gap right there. And then if I go to, this is just kind of my framework, right? So if I go to, that's the up move there. From there, we made this all-time high, shot down. Here we have some buy-side liquidity where we have these relatively equal highs right up here at all-time high. Displaced down. So on the 15-minute, you would say the market structure is short because we displaced through these lows down, leaving big fair value gap, which means there's a higher time frame fair value gap, and this inversion. So I was curious to see if price would run up into this area. Because if you look, if we look at the price action here, this accumulation area, we did deliver pretty well. So even though we displaced down, if you look here, we had this sort of, we had some buy-side liquidity all up in this area here. And this wick right here at 9:15. Well, first off, this 8:45 one came up, took this buy-side liquidity here. This one took remaining buy-side liquidity. And then now with this open, we just shot up here, nearly closed the gap. But then we also took the rest of this buy-side liquidity in this area, this intermediate minor buy-side liquidity. Took that here. But also, what I was wanting to see, what I watched was this wick. See how price switch reached down or came down and reached up right here to this fair value gap? Well, if I measure this wick, look right here. This next one that took buy-side liquidity exactly to the middle of it, mean threshold, right there. Drop. This one again ran up, closed down. Right now, this opening wick, we reached down into this internal range liquidity. I had this sell side liquidity, which we just took. So it's basically what it's doing is it's taking, for the moment, it's manipulating, right? But it's taking stops from each side. People that are trying to Short breakout here, right? People trying to break out long. That's right now. It's just cleaning out the market on a Monday morning. No news. So yeah, exactly. Beautiful manipulation. And if you can spot the manipulation, then the goal, the idea is to not be manipulated, right? So we'll see. And that's also why I like to wait until the 950 macro or the 950 time, whether you believe in a macro or not. It's regardless to me, the market does something at that time. So right now, and you can see too, like this 15-minute, look at it, wick down, wick up, and look at the body, right? So currently I had this sell side liquidity because that's the most recent, that's like all we really had. We had sell side liquidity here, and that's why I have it marked as a minor sell side, all here. And I knew price would take that out pretty soon, pretty quick, because this accumulation area. So that's why I marked this one down here as a sell side liquidity. And then now you have this wick that reached down here, and then this huge fair value gap, right? So it could still reach down anywhere in there. And then it also, I'm going to be very curious because I think what I think was going to happen is we do come up into this imbalance here. I don't know if we completely rebalance it and take this buy side liquidity today or this morning, but I really, here, let me get rid of this. I really think we're going to reach up here at some point into, because this, when you have this kind of displacement taking these lows, because again, if you look at what's fractal, meaning everything looks the same at different time frames. So if you look at this the same as you would a 1 minute, what do you have? Price higher highs, right? A break of structure because we took these lows, leaving displacement. So if it reaches back up here, then, you know, if you're looking for an entry, that'd be a short down in that area. As far as like being fractal. So the same thing on the 15-minute. I would expect price could reach up into this area. Now, it did hit right here into the fair value gap. We'll see if that's all it needs and then continue down. Or if, like I said, it wanted to come down here, take this sell side liquidity, reach into this internal range liquidity a bit. Now, look at this. Hold on. I might have just spotted something. Let's check this wick. Here's the mean threshold of this wick right here. This wick that reached down. Overshot it just a little bit, but right in there. So we'll see if that's all it needs to the downside, and then if it wants to reach back up here. So right now, I'm not loving the framework because there's a lot of possibilities, and I don't have something set in stone that I'm really liking. So I just kind of want to wait and see, let the market kind of play its hand, and see if something presents itself. I'm not going to be, again, this is another week where it's CPI week. So CPI day, the market will wait on CPI. Tomorrow, I'm definitely not trading, no matter what. And then Wednesday, I'll trade Wednesday CPI because that happens before I trade. So let's see. This was 931. So technically, this is going to be the first presented fair value gap right there. So mark that out. First presented fair value gap. And then we had this huge shot up. Then we had this huge one here. Oops. So I want to see what happens with this one right here. Just kind of take note of that. And then we are right at here. Let me show you my new week opening gap because today's Monday. New week opening gaps. If it'll show it. Not sure why. Hold on. It's on my other screen. New week opening gap. Okay, I don't know why it doesn't want to show it right here. So I'll just pull this one over. Pull this one over here. New week opening gap right here, 634 up to 648.75. So keep that in mind as well. I don't know why it's not showing it. Dang, trading view. Let me set this back to one contract. Because I don't know if y'all saw my screenshot on Friday. I didn't stream. And I ended up taking a trade because I had it was nice. And I went in with half my normal size. And then I saw another opportunity. Well, I went in with half my normal size because originally the way the market looked, it looked like I was going to need a bigger stop than normal. I normally like to have like a 25 to max 30 point stop, but it looked like I needed around a 40-ish point stop. So I always drop my contract sizing when that happens. And then I waited and waited and waited, and then eventually it got to where I didn't need to reduce size. And then I got in my trade, but I still had my sizing down. So I was like, So then whenever the market pulled back to a certain area after I was in a slight profit, then I added back in again. So I had my contract sizing changed up here. I should do a giveaway to the top 3 sometime. Actually, speaking of giveaway, I don't know if y'all saw my post in my Facebook group, in the Apex one that I have. I am doing some giveaways starting this week. So of Apex evals, I'll be giving some of those away on the stream here. And that's because the group finally crossed 20,000 members. So if you're in that group, thanks for being a part of it. And what I posted in there, and basically I'm going to give away some evals this week as a thank you to everybody that's in the group. But the giveaways are going to be here on the stream. So that's just something to look forward to. Max, no, I don't ever scale in. I don't scale in or scale out. I know ICT teaches a lot of taking partials and pyramiding and all that. I don't do any of that. And that's for a couple reasons, actually. For one, I was never ready to do that. Like, I wasn't ready discipline-wise or account size-wise to do that. So for me, I would just take my profit. Or at the first site that I see. The low-hanging fruit, because I take the low-hanging fruit profits, right? So I don't look to take long entries. So at that point, and even now, even though I'm better than I used to be, and I probably could do that, I honestly don't see a real reason for me to do that. Because I just enter, get in and out, and because here's my thing too, like, and I don't know if this goes to, I don't think this boils down to like any type of fear or anything, but because I am trading 20 PA accounts, right, with Apex, if I grab, let's say, for example, I'm using 5 micros, and I grab 35 points with 5 micros, okay, whatever that comes out to, that's that profit. But let's say I took that same trade with 5 micros, and then I say, well, I'm going to take off 1 or 2 and leave a runner, right? I would have to really see the data on how often that runner makes more profit. Because now if that 1 or 2 contracts that I leave on come down to break even or a smaller profit, then obviously that's less profit than if I would have just taken the whole thing off at that 35 points. So, and because I don't really shoot for bigger targets, to me, I just don't really see a reason to do that. And even scaling it, and it really mainly also revolves around my money management, because I have an extremely set plan with my money management, where I know I want to make at least 35 points profit, and it's usually 35 to 60 points, and I definitely don't want to risk more than about 25 to 30 points. And that also allows me to, I mean, even if you win 50% of the time, you're going to make money doing it that way. So that allows you to make mistakes. It allows for a lot doing it that way. So that's another big reason. So here, I'm not opposed to going long at some point because, like I said, I have that target, those targets up there, and I do believe price is going to reach up here. But I and we took this sell side liquidity and we never stayed below it at all. We wicked below it, and you can see here price could not stay below it at all. And now we're definitely going to invert this big fair value gap right here. And I am bullish overall, and we are going to trade above this first presented. Let's see. Let me go to the 5 minute. We have this little fair value gap right here. The thing is, I need a definite target if I did go long. And there's not really a definite target because it could trade up anywhere into here. Let's see. Let's do this. Let's get this dealing range here. Equilibrium is right here. And actually, let me just go ahead and include this wick for all-time high. Equilibrium would be here, so that would be my first target. Would be... There's a little imbalance there. Let me go back to the 1 minute. Yeah, there's not much on the 1 minute. Let's see. Let's go to the 15 minute. See, and look at this wick here. Let's bar, I mean. Wicked all the way down, wicked up. Have a little imbalance there. Yeah, it's hard to actually pinpoint a really good target right now because it could come up anywhere in this area. It might be easier actually to allow price to run up and then look for on the lower time frame, a market structure shift back down to a target at that point. We'll see. That's what I mean by I didn't really like the framework that much today. Because no matter what, I have to have a target. No matter what. Did y'all have a good weekend? Hope everybody had a good weekend. Did anybody trade Friday? Oh, man. I was researching a bunch of cameras. Because right now I use a web camera. And it's supposed to be a really nice Logitech 4K webcam. But I learned a lot this weekend. I learned that even your basic mirrorless camera that is not a webcam, the quality will actually be much better. You can adjust the settings to stream even in 720 to look much better than a webcam in 4K, which was crazy. So, about to order a camera this week, more than likely, because I need to get my videos a little better quality, and I need to get my lighting right, especially because I'm making that discipline and psychology course for those of you that didn't know, and I've been getting a bunch of the content together. As of right now, I have like 11 modules, and probably it's going to be like 12 hours worth of content. But when I start recording, I need really good quality, crisp images. Same webcam? Probably. It's a Logitech Brio. I mean, I thought it was really good. Which it is for a webcam. But... Alright, let's see here. See what we have going on. We have this little volume imbalance right here in this first presented fair value gap. We have no fair value gaps going up yet. This little bitty one. But now we close the opening range gap. We are in this 15-minute imbalance here. Fair value gap. So, yeah. I want to see... It's 950. Right? So that's... But I want to see if we're going to push up anywhere here and then just drop. Here's equilibrium. See the 0.5 right here that I have? This purple line? That's equilibrium. So Just kind of waiting here. Yeah, Mahmood. Yeah, that's I have. So I have my 15-minute on my 15-minute chart. I have it marked as one big fair value gap right here, which also is, of course, a 1 hour. And then I believe there's a 1 hour inversion as well that I saw. Yeah, so it's basically it's the same thing that I have marked here. 1 hour fair value gap, 1 hour inversion right there. So that's why I'm kind of thinking price can draw up to this area, and then I want to see what it does. I might wait to see if there's a market structure shift and a move down for a better target, just because it's not showing me how high it can run yet. So today is just going to be a waiting game for me. Yeah. Because, see, if I did take a short, I have more targets. Like, right now, we have sell-side liquidity right down here. And look at this again. Let me measure out this wick that reached down. Right to the middle, right here. So, I notice that all the time. When we have reaching wicks, if a wick can't, or a body can't trade below the midpoint of that wick, that was a sign right here that price would reverse up. But, there's nothing to do with it yet. So now, here's that volume imbalance right here, London low. Let's see what price does. It rejected right off of equilibrium right there in this 15-minute / 1 hour fair value gap right here. Is that all that it needs? Is this move up? We'll see. I'm going to mark this wick out as well, just in case if price does move down, that I have another area I can target below this in case if I need it, before it gets to the midpoint consequent encroachment of this big gap up. So we'll see. And today I'm going to need some obvious displacement. See right here's that volume imbalance. Right there. We reached right through it. Right there. So we'll see if we can close and trade under it. Close and trade under the first presented fair value gap. See what it does in this inversion. Right now there's kind of a few little conflicting areas. Yeah, we hit the high, the new week opening gap high. On that reach up right there, bounced right off of it. So, we'll see. That might be all it needs. Maybe let's see if we get displacement down or what happens. It's going to need to be obvious, though. We have a little fair value gap right here on the 5-minute as well. That it took this high, left this little 5-minute fair value gap, and reached right down into it right here. So, watch that as well. Still hanging out here near equilibrium of this entire range. But yeah, I knew right off the bat, though, after I got done framing everything out, that I just didn't love the framework. So when that happens, you just got to kind of keep reading what's going on and keep analyzing and just see if the market ends up presenting itself, showing its hand of what it wants to do. And if it never does, just don't take a trade. You know, obviously, if you're trading the same style as I am. But actually, in any strategy, whatever you're using, if it doesn't show what you're looking for, just don't take a trade. Depending on what phase you are in your trading life, that could be easier said than done. Let's see what ES is doing. So NQ is down. Let's see what ES is doing. ES is down. But it's down on the day, but it's not too. Let's see. Where's the open? Open's back here. We're not really very correlated. YM looks like it's pushing down. Let's see. Let us see. Now we do. So this is what I want to watch too. Look at this. I'm telling you, the wicks tell the story. Or not tell the story. They do the damage. The bodies tell the story. But they tell you a lot. Because watch this. Reached up. Came down. Reached back up again. Couldn't go across the midpoint here. Made a lower high. And now we just took this low here. We have a volume imbalance right here. It's not huge, but it's there. And then we may be getting a fair value gap here. So I want to see. I'm still not going to. I won't take. If we get a fair value gap right here, I'm not going to take a short right here. Not yet, anyways. Because this is still not really showing its hand just yet. We have this big inversion. I don't think this inversion is going to do much because. Now, if we do end up displacing down very nicely, then I may consider taking it. Right here. That volume imbalance, but I'm going to wait. I would wait, though, anyways, because we have that volume balance right up there. But this, just like I said back here, this wick not being able to reach midpoint, mean threshold of this one, is a sign that we could be heading down. And the market closed the opening range gap. It did reach up into this fair value gap some, so that might be all it needed. But that's also why I had more targets to the downside. Also equilibrium right there. Couldn't go above it. Traded through that 5 minute fair value gap that I mentioned right here. So it's looking like we do want to go down. Not really respecting this inversion anymore. That's why I didn't really like this inversion anyways from the get-go. I'm going to get rid of it so we can see better. I may short this area, but I'm going to wait until to see if we reach up to this volume imbalance first before considering it. It's not a really big one, and it could be because I had my chart expanded a little that it made it look bigger, but we'll see. First presented fair value gap, reaching up to the middle. See what happens there. It's about to be 10 o'clock, so 10 seconds. So what could happen is it could wick right up, tap that, and come down. So I'm going to wait. But I'm going to be ready to enter if I need to. Let's see if it hits that. I want to see it if it hits that and drops. Like, I want to see it, if it does touch this, to immediately react off of it and drop. And that'll tell me we're going to go down. Close right at the middle of this. Ooh, yeah. I'm going to wait. But we may be heading down. It might not go for that imbalance. That volume imbalance. Not going yet. Just because... See, you can't get tricked either. Like, I would wait. Because if this displaced again and left another fair value gap, then I can just get in right there. Like, I don't need to try to chase as it started to drop right here. Because it still could come up here. You see how this wick, this may be a wick reaching down again. These wicks can get you. So I want to wait for this imbalance here. So wick reaching down. Now we are almost closing this fair value gap. We didn't quite close it, but almost. Now we're reaching right down into the middle of this wick. Right there. Look at that. Almost to perfection. What's the low of this wick? 623. The middle of that wick was 623. So let's see. Okay, now we're trading below the middle. I'm still going to wait. Like, I'm not just going to short because this is holding up here. Because if this does go short, there's plenty of room below for areas that it could go to. Right now, I'm just trying to avoid getting trapped or manipulated into thinking it's going to go short when it might not be ready yet. Bullish SMT divergence. Yeah, you got low, higher low on ES. I don't really watch SMTs too much, but then lower low here. Since I go for low-hanging fruit, it really doesn't matter. SMTs don't really make or break me. Every now and then, like Friday helped. Friday helped me. There was an SMT divergence that I saw. Because again, I'm looking for 35 points at a minimum. So right now, because we have this high, lower high, and then this swing high here. If it takes this high to hit this imbalance, I would want to see it still, like I said, hit this imbalance and immediately displace down if I'm going to look for a short. If not, it could take this imbalance, take this swing here, and it could continue up, all the way up, displace up, leave fair value gap, and then you know, we'll head. Got plenty of area to head up as well. So I'm still not 100% convinced either way. Still waiting to see if the market shows itself. But see this here, even if it comes down, but look what happened here in this 5-minute fair value gap. Look where the bodies are closing. They're wicking. Bodies are closing here, right? It's like, can't get trapped. Look, even if it comes down now, this bodies are before, and this is a brand new 5-minute bar, but bodies were closing here. Now, if I get a fair value gap down through this low, I'd consider taking that one short. There's not a lot of room, though. Like, there's not... This would be a good entry up here that I would like to go right down to this low. It'd be a nice move. But reading price action, I wasn't ready yet. Let's see if it's one last kiss to this fair value gap. First presented, or if it's going to keep reaching up. I'm going to go ahead and mark this 5-minute gap right here, just to keep an eye on it. Reaching up. Watching the wicks. I mean, when you look at the 15-minute, look at this. This looks like pure manipulation. This wick, right? This candle, 9:30 candle. And then now, it's still just, this next candle reached way up, closing down here. Yeah, Pete. And this very well could have something to do with CPI in 2 days. And that's exactly why I'm not trading tomorrow. Because this price action today is very similar. We'll probably see much worse tomorrow. But that's why you got to go into this Monday also carefully. Because Monday, it's not always, it could be just as bad as tomorrow before CPI. And there might be something that comes up later in the morning or even the afternoon. It might not be anything in the morning. So just gotta have patience. Yeah. I mean, you can read it, but it's not good, and you don't want to really trade it unless if you get that obvious displacement. That's what I'm looking for. Because currently it's still looking like it wants to go, like it'll go down. But, I mean, with the price action, anything can happen right now. Yes, Will. Actually, I don't even trade the afternoon session. I wait. If nothing comes up or even looks good by about 10:30 in the morning, then I call it a day, and I just come back the next day. And that's also why I take one trade a day. And all that revolves around my 4 years of discipline issues that I had to overcome. Have to do that. Have to limit myself. Because the way I frame out the mornings too, if I don't see anything by around that 10:30ish mark, because usually by then I can know if something, it's like setting up to, maybe the next few minutes, next 10 minutes, 15 minutes, it might actually have something happen. But if that doesn't work out that way, then that just means either I'm not reading the market right or the market's actually not acting right. And I have no business in it. So that's kind of my thought process behind that. Yeah. Yep. Finally closed through that right there. I'm just going to mark it as an inversion just to see if it wants to kind of use it as an inversion here. There we go. So technically, if you shorted this fair value gap here, you'd have never really been in drawdown very much, just a little bit. But you'd have sat through all this choppiness right here, and which is fine. I mean, to me, I don't worry about that. I just don't like it being way in drawdown and sit through that. Because I want it when I want to get in, I want the market to be ready to go, like preferably. So I want to watch this and see if we leave a fair value gap right here, because this is what I was looking for. If we could take this low with some displacement and fair value gap, that'd be an area right here I'd be okay shorting. But it doesn't look like we're going to get it. Yeah, see, if I go to that 5 minute, you can see here it closed, and then price came right up back to here and dropped. So if we're in low resistance conditions, it should have displaced and ran down by now. But it's not quite doing that. So it's looking like it's potentially high resistance liquidity conditions at the moment, because I am seeing some areas where the market keeps presenting itself like, and it should displace, but it's not really doing it. But it's still doing what the market's looking like. It's just not going with displacement. And that's when you can know that it might be high resistance liquidity conditions. No, Max, there wasn't a particular trade or anything. I mean, it did. I knew, a long time ago, before I even went to one trade per day, I did know I had to limit myself to a certain amount of trades. When I was using different trading system at that point, here's a little volume imbalance. I want to see what happens here. Right there. Reached right down into it. And immediately moving away. This might. I'm just gonna watch this. I don't know this. See what happens here. But yeah, no. I knew I had to limit myself anyways, because I had bad discipline for so long, and I'd lose control. And so the first thought was, if I could just limit myself to a certain amount of trades. So I used to do 3 trades, but then whenever I got doing ICT, I also did like 2 or 3 trades in the beginning. And the reason why I went down to 1 trade is because I started getting very, very, very precise on what I'm looking for. And it kind of came down to, not really, because he has the silver bullet, right? So it's kind of a mix of learning the 2022 mentorship and knowing the silver bullet, where I was like, if I can just identify what the market's trying to show me and just look for that one entry, frame it out for something, one thing. And if I find it, then I take it, and that way I could be very comfortable with my trade, not hesitate, things like that. And if it wins, great. If it loses, whatever. I feel good about the trade itself, and then I can know, hey, all right, so it was there, and I took it. Whether it works or not, that's besides the point, because even just taking any fair value gap can kind of have a decent probability. So I know if I frame out everything, then I should have a higher probability, at least more than 50%. And if I take one trade, then over the long term, the probability should work in my favor, especially if my winners are more than my losers. That was kind of my thinking behind it. All right, so we are staying below that little imbalance now. We traded through it. Just no real displacement. There was a little bitty fair value gap right here. I need some obvious displacement. Might get another volume imbalance right here if this bar closes down. So I want to see it displace and leave us a nice fair value gap. Because like I said, I have a lot of reasons targets lower that I can aim for. I don't need to just aim for this low. I can aim for this line that I marked earlier. And I can aim for the consequent encroachment right here. All right, reached right back through this volume imbalance. No fair value gap. It's just not displacing. So very much so looking like some high resistance liquidity conditions at the moment. That's what I mean. Like, here was a nice, lots of reasons, lots of framework for it to go into this fair value gap and just displace and drop, or even reach this imbalance, displace and drop. It reached, came down, and now with all this price action, the way it's doing, this is high resistance right here. Because it should have ran down by now with this whole, the way it's looking. Trading view is frozen? Oh, man. I was talking about this the other day. Every now and then, like 2 or 3 times, trading view will start like glitching a little bit, and I close it, open it, and it's fine. But I've never had trading view ever freeze or give me any issues. Yours too, Chris? Dang. I wonder if something's going on with trading view. But Chris is not really a good source when it comes to tech issues. Messing with you. Seeing how price is just shooting back up. Look, right to this inversion again. Let's see what happens there. Wow, everybody's trading view is messing up. Kissed the inversion one more time. Yeah, mine is good so far. Hopefully nothing happens. Nice. Win on gold, huh? All right, kiss that inversion. Look at that. Spent no time up there. I like that. Still no displacement. Like one last touch right here of that first presented fair value gap inversion. I would love to see this thing displace now. Hopefully nobody was in trades when y'all's trading view messed up. Oh, you're in a trade, Chris? I'm assuming you shorted this one. Yeah. Yeah, this is definitely... It should get down there, but it's definitely high resistance. So I'm okay with skipping that one. Especially because I was waiting for that volume imbalance. This wick right here is going to be crucial. Throw my fib on this wick. If price comes up and takes consequent encroachment, then... I mean, because right here... Let's see. There's some minor trendline liquidity all right here. So I would not be surprised if it reached back up into this 1 minute again. But right here would be our first telltale sign, is if it can cross mean threshold of this wick. Max, hey, sometimes we got to take those signs and run with them. There's been every time that I have issues like that where things are doing that, and then I'm like, no, I gotta trade out, and I force a trade, and I never get lucky. And I guess I can thank the trading gods because I never get lucky on mess ups, and it's always like, all right, lesson learned, please, lesson learned. I got you. If this closes up, we're going to have a nice volume imbalance right there as well. This one would be a pretty obvious volume imbalance. But you see how it tapped this lower quadrant right here, perfectly came down. Let's see if we come up to mean threshold, if we take it or not. This is too perfect, though. This wick and this wick. I mean, they're exact. It's too perfect. Another reason why... Unless we displace down, we may take this swing high right here. And we have that trend line liquidity. So that's just very micro reading. That doesn't always work out that way, but it's just things I kind of look for. The 15-second, we did have a market structure shift. We did have a fair value gap right here. It did close back through it, but... Yeah, we'll see. I have an overall bullish outlook. And yeah, it very well could come right back down in this area and then see it run up. That's why, I mean, my framework right now is 50-50 at the moment. Unless if I get something very obvious. So we'll see. We might be getting the displacement now with the fair value gap, but here's the thing. Because we're the way price action is right now, if we do get this fair value gap, I would want to see if we invert it immediately. That's if we even get it. Yeah. It listens. Oh, who said bullish? All right, I'm going to mark it. It looks like we'll probably get it. We got 15 seconds. Again, I mean, this is right now. It's still on the 1 minute here. It's still showing that it wants to reach down, but... And because we're under that minor sell side, we may want to reach down further into this sell side liquidity I have, which would put us right down to that wick. And actually, you know what? That wick that I marked, let me put the fib on it. Because I bet we're going to reach down to the midpoint of it, this purple line right there. And then this wick right here. We're right at mean threshold of it. There we go. We pushed through the middle of that wick, so I'm going to get rid of that fib. And here's the low of it. There we go. Took the low right there of that 15-minute wick. So let's see if it keeps, oops. See if it keeps reaching down to consequent encroachment of it right here. 55475. We have this one. Still no 15-minute or 5-minute fair value gaps just yet. Might get one here as well. Yeah, now it's just probably going to run. Let's see. Got this one, basically a double. Yeah, that last kiss of that inversion right here, that was nice. Hit that. See you later. Now it's reaching right down to the middle here. And this is where I would look to see where could price run to. Now it's obviously displacing. There's the data high from NFP high. Coming down a lot of area here. So here I'd want to see if that's where price is going to draw to the midpoint, somewhere in this area. And kind of do a pullback. And if that was to happen, this low right here would be a mitigation. Or if it wants to keep reaching down. Because we have a lot of reasons for it to keep coming down. Old opening range gaps. The daily fair value gap, lots of reasons. Yeah, I just didn't. This right here worked. This fair value gap. But to me, the market hadn't presented itself yet. So that's why I didn't take that. Obviously, if you took it, it went to its target, but high resistance liquidity conditions, I'm always okay not taking a trade in. It has to be very clear for me. It has to be very clear. This is where I want to see, now that we reach down here, I want to see this fair value gap, if this one's going to hold. Now that we reach consequent encroachment here. Is it going to hold or is it going to invert? Because, again, there's still a lot of reasons to go down. However, for me, this is for the day. We're in a discount, right? So I'd be shorting discount to more discount. I'd have to go to basically this 15-minute and frame out this entire area here. And even then, we're still in discount. So it's not really something that I'm a big fan of. It immediately inverted this one. So this is a sign that we may be going up now, is what I would be, because that's what I'm looking for. We drew down to the consequent encroachment here. Inverted, so we'll see if we get another fair value gap, and if we do head up, I mean, it may keep running down. At this point, like I said, it's 10:30. So basically, my framework, that's what I said at the very beginning. I really didn't like it. I wasn't 100% convinced. And for me, I like to take high probability trades, for me, in my opinion. So if it's not a high probability trade for me, I'm not going to take it. And I'm okay with missing it, even if it goes, because I don't like this. I don't like the high resistance. And to me, it's not a high probability. So here, we immediately inverted this fair value gap, went right to the middle, left a new fair value gap. So now, this was the reach down. So now it may be done going down. We'll see. But for me, there's nothing going to be there for me anymore. Because now if we get something, it could be later in the day. It could be later this afternoon. I'd have to wait now to see what plays out. So, yeah. No trade for me today. Let's see if this holds up here. But even then, we don't have a market structure shift. We're probably going to start leaving some fair value gaps down. So it's not something I'm just going to go long at. Price closed right at the middle of it. So in 12 minutes, we might get a fair value gap here. Like I said, it may pull right back up to maybe the midpoint of it, somewhere in this area, and continue to drop. Not sure. CPI week, I won't be trading tomorrow either, for sure. So I'll be back on Wednesday. But, yeah. Now, if you took, there's nothing wrong with this trade. It's just not for me. This trade is not for me. It's not as high of a probability trade, and it's high resistance liquidity. So, but yeah, I'm going to go ahead and end the stream. No trade for me. I won't be in tomorrow. I'll be back Wednesday. Hopefully I can do the giveaways starting Wednesday. But don't forget, I'm going to do some giveaways for some Apex evaluation accounts. And I'll do one each day. Hopefully I can start on Wednesday. We'll see. So, yeah, see, this is holding up. But if you're going to keep trading, just kind of watch this. It may be done going down, and it may run all the way back up and start heading back up into this area. So, all right. Hopping off of here. I will see y'all Wednesday. Thanks for joining. And as always, trade well, everybody.
Yeah.